Okay, so I have a lot to cover here about this 45% tax and the unrealized tax that Harris might implement on US citizens. This is my friend Bubbles. Say hi to the camera. She's okay. She's not really into Bitcoin or taxes or anything. She didn't pay anything. She's just a big cow. All right. So, but first, okay. So there is a lot to talk about in this that I didn't discuss on my previous video about this. You're definitely going to want to hear this. But first off, we have CZ, founder of Binance. He is out of prison and has been transferred to a halfway house. Yes, Bubbles is very excited about that. I'm very happy too. Full release in September, just in time for the bull market, which is kind of cool. Okay, next up we have Mt. Gox payouts are continuing. We have 13,265 Bitcoin on the move. I think there's about 40 something thousand Bitcoin left, which shouldn't be that bad. Guess who's gonna definitely eat it up if people actually do sell it all? BlackRock and all those other institutions, right? So, yep, and you're gonna be eating it up too, right? Bubbles, just don't hit me. Thanks, buddy. All right. Let's get into the main story here because I'm not worried about this Mt. Gox thing. Not everybody is going to sell their Mt. Gox coins. One of the reasons for that is because the people that were buying during Mt. Gox times were people that understood Bitcoin, that actually cared about the Bitcoin protocol. Most people nowadays, most 90+ percent influencers out there only care about the price going up. That's why they care about regulations getting involved and stuff like that. They don't understand Bitcoin itself, why it was created, why it took money out of the state. They couldn't care less, which is actually kind of sad. Yeah, I have so much more to cover on that, but let's get right into this. We have Jameson Lopp has a really good couple tweets here. Okay, so he says the proposed wealth tax is nothing to worry about. It only applies to the richest of the rich, and in quotations, right? What did I say back in the day, or back a couple of days ago? I said this happened in 1913 when the income tax was conceived in the United States, and it was for the wealthiest 1%, and it was only supposed to be temporary. And that has drastically changed, hasn't it, guys, since 1913? So you give government a little bit of wiggle room and they will take 550,000 miles, won't they? So here's what he says. The Revenue Act of 1913 lowered average tariff rates from 40% to 26%. It also established a 1% tax on income above $3,000 per year. Keep in mind, $3,000 per year back then was a lot of money. The tax affected approximately 3% of the population. A separate provision established a corporate tax of the 1%, superseding a previous tax that had only applied to corporations with net incomes greater than $5,000 per year. Though Republican-controlled Congress would later raise tariff rates, the Revenue Act of 1913 marked an important shift in federal revenue policy as government revenue would increasingly rely on income taxes rather than tariff duties. Yeah, so that's history for you that a lot of people aren't going to tell you. This is coming, okay, guys? Like, this isn't something you're going to be able to opt out of. This is coming. This unrealized tax and also a massive increase in capital gains tax. Let's go on to Lena Sishi on Twitter. She says, unrealized tax is the government punishing you for trying to protect your savings, which are being destroyed by the government in the first place. If you invest, you pay unrealized tax gains. If you don't invest, you pay inflation tax. You lose either way. thanks for playing. It is all a game to your government. Your government doesn't care about you. You should know that by now. That's why I don't vote for these stupid politicians, and I go where I'm treated best. Whether it's, I don't fall in love with any country out there, because these countries, the people that run it, do not care about you whatsoever, no matter how much you like your favorite politician. But let's end it with this. What happens if you raise corporate tax rate? The corporate tax rate is a tax on production. By the way, this is from Edward Dode. Raising the corporate tax rate will, over time, cause capital to leave the United States for more favorable environments, like Dubai. That is why Tether has decided to expand their stablecoins and has created a Dirham stablecoin, which is the AED is the ticker symbol for the UAE. Okay, for the currency over there. So let me read that again. Raising the corporate tax rate over time will cause capital to leave the United States for more favorable environments. Capital is fungible and knows no borders. Keep that in mind. It does not know borders. It means less employment in the United States. It's a vile step in the wrong direction and will hasten the destruction of the middle class. Maybe that's the goal, and absolutely is the goal, because the poorer people are, the more they can destroy the United States, the more they have control over the people over there. It's just very simple. If you can go back in time, you can even look at like 1971 when Nixon took the U.S. off the gold standard. What has happened since then? The dollar has lost, I think, around like 90% of its value since 1971. And you know what? It's going to continue. Nothing's going to stop it. So that is why I encourage people to buy Bitcoin. Read Heidi's book, Why Crypto. You can check that out at shop.learningcrypto.com, and check out our trade alerts, portfolio updates, and so much more at learningcrypto.com. Catch you later. Like and subscribe.